Hi everyone, this is WinWin from CondoDee Bangkok. Today, let's talk about rental yield, the real key to smart property investing. In 2025, Bangkok's market has changed. Capital gains slowed down, investors now look for steady rental income instead. In this episode, you'll learn what rental yield really means, how we calculate it, and how you can use it to find better performing condos. At CondoDee, we don't just sell condos, we sell performance.
Rental yield is simple. It shows how much income your condo earns compared to its price. Think of it like this. Your condo has a salary. The yield is that salary as a percentage of its value. For example, if a condo costs 8 million Thai baht, it rents for 40,000 Thai baht per month. That's about 6% gross yield. Yield is what investors use to compare projects and areas. It's the ROI of real estate. When you speak in yield, investors listen.
How CondoDee calculates yield. At CondoDee, we calculate yields using real market listings from Thailand open resources, those we can trust. Here's how it works. 1. We collect for sale and for rent listings for each project. 2. We calculate the median price per square meter for both sale and rent. 3. We convert monthly rent to annual rent. Then we apply this formula: annual rent divided by sale price times 100%. This gives us the median rental yield, a fair, data-based snapshot of performance. And yes, listing prices are often 10 to 25% above real transactions. But since both rents and sale prices are inflated equally, the yield ratio remains objective. That's why listing-based yields represent reality quite well. Even if numbers are inflated, the ratio tells the truth.
What affects yield in Bangkok? Now let's look at the insights we discovered from hundreds of projects. Pet-friendly condos have lower yields. They're rare, expensive, and built for lifestyle, not investment. Low-rise buildings deliver higher yields. Lower land cost leads to lower PSM, which leads to higher return. Condos further from BTS give better yield. Price drops faster than rent, so yield gets stronger just a few hundred meters away. Mid-age projects, 10 to 15 years, performed best. New is prestige. Mid-age is performance. Old is maintenance. And clean shit, Chatanam? Prestigious, but low yield. That area sells prestige, not ROI.
For those of you watching this video, take a moment to look at these numbers. They show real rental yield insights for the Bangkok CBD area. If you're just listening to the podcast, no worries, I'll walk you through the data right now. Overall, Bangkok CBD. The median condo price in Bangkok's CBD is about 12.5 million baht, or 141,000 baht per square meter. The median rent is around 43,000 baht per month, giving a median rental yield of 4.1%. That's our city benchmark. Point number 1, pet-friendly projects. Pet-friendly condos are much more expensive, around 26 million baht average price, but yields are lower, just 3.8%. So lifestyle projects come with a cost, more comfort, less return. Point number 2, building height. In CBD, low-rise condos give about 4.4% yield, while skyscrapers drop to 3.9%. Lower buildings mean lower prices per square meter, and that means better yield performance. Point number 3, distance to BTS or MRT. Condos right next to the BTS average 4.0% yield. But as you move away, 600 meters to 1 kilometer, yields increases to 4.3% or more. That's because prices fall faster than rents. So farther from BTS often means stronger ROI. Point number 4, project aid. Here's an interesting pattern. Mid-age condos, around 10 to 15 years old, have the best yields, about 4.5%. Very new or very old projects both drop to around 4.0% or less. So mid-age means best balance between price and rent.
Summary inside. Tax of pet-friendly projects. Luxury lifestyle premium. Smaller tenant pool, lower rental yield. Great for end users, not for yield-focused investors. Low-rise condos, side to side with the larger side, lower construction and land costs, higher price efficiency and better yield. Often outperform high-rise and skyscrapers for cash flow buyers. Distance from BTS. Units 601 kilometer from stations often deliver stronger yields than those next to BTS. Tenants pay for space, not always for steps. Project age. Mid-age condos, 10 to 15 years, offer the best yield-to-price ratio. New equal prestige, mid equal performance, old equal maintenance.
Rental yield insights by location, Bangkok CBD. For those of you who are watching this video, take a moment to look at these numbers. They show real rental yield insights across different locations in Bangkok CBD. If you're just listening, no worries. I'll walk you through the data step by step. In the Bangkok CBD overall, the median price is about 12.5 million and the average yield is 4.1%. That's our benchmark for comparison. Now, let's look at the different zones. Asoke offers a healthy 4.1% yield, close to the city median, a solid balance of rental demand and resale value. Bramthong is more lifestyle driven, with higher prices around 14.5 million baht and a moderate yield near 4%. Nana delivers slightly better returns, around 4.2%, thanks to strong expat demand and moderate prices. Moving east, Thonglar Ekmai stays stable, around 4.1% yield, with higher prices but strong rental turnover. Now, the big contrast. Diamond Planchet has the highest prices per square meter, nearly 200,000 baht, but the lowest rental yield at only 3.6%. Why? Because these are ultra-luxury, owner-occupied projects. Buyers pay for prestige, design, and attributes, not for investment return. Meanwhile, Silong Sathorn offers about 4% yield, driven by strong business district rentals. And Petchaberry Road surprises with one of the best yields, around 4.3 to 4.5%, thanks to lower prices and consistent tenant demand.
Summary insight: prestige areas like Plaringchit and Langswan sell image, not yield. Investment areas like Nana, Asoke, and Petchaberry deliver stronger performance. So if you're an investor focused on ROI, look where prices are realistic, not just impressive. In Bangkok's property market, luxury builds prestige, value builds income. Real-world example. Let's look at one example. Supalite Place, Sukhumvit 39. Median project data shows yield about 4.5%. Now, a real resale unit was listed for 8.9 million THB, which is 16% below the median price per square meter. When we apply the same rental rate, the real yield jumps to 5.4%. Same project, different unit, better price, higher yield. It's all about the price. Even in low-yield project, a smart deal can outperform the average.
Advice for Bangkok property investors. Let's start with what's really happening in the Bangkok property market. Capital gains have slowed in recent years. Rising interest rates and higher construction costs have reduced the speed of resale price growth.
For many investors, the buy and free-up strategy no longer delivers the same returns as before. Investors now focus on stable rental income. Steady monthly rent feels safer and more predictable than waiting for uncertain capital appreciation. Bangkok is no longer just a trading market, it's becoming a rental income market. Bangkok has shifted toward yield-driven investment. Buyers now look for projects with strong rental demand and sustainable yield performance. Instead of asking, "What's the resale price?" investors are asking, "What's the yield?"
Smart agents and smart investors use yield data to decide. Understanding area yields transforms a general conversation into an investment strategy. It's not just about location anymore. It's about the efficiency of your money. As CondoDee says, Bangkok is becoming a rental yield market, not just a capital gain market.
Practical advice for investors. Now let's turn that insight into action. Focus on yield, not just prestige. A low-rise or mid-age condo can perform better than a luxury tower. Compare yield per area. In Asoke and Anana, average yields are around 4 to 4.5%. In Rama IX and Pachiburi, closer to 5 to 6%. Evaluate price per square meter. A lower purchase price often means a higher real yield. Don't chase new launches blindly. Brand new projects carry premium pricing and often lower ROI. Use data tools like CondoDee's MPAR, Market Price Assessment Reports. Help you find the sweet spot, below median price, above median yield. Bangkok's property market is evolving. It's no longer just about buying early and waiting for appreciation. Those days of fast capital gain are behind us. Today, real success comes from buying smart and earning steadily. Smart investors now look beyond glossy brochures. They ask the right questions. What's the rental yield? What's the price per square meter? How does this project compare to market medians? That's the mindset of today's data-driven investor. At CondoDee, we don't just talk about listings, we talk about performance. We measure, compare, and analyze each property to understand how it truly performs in the real market. And here's my advice. When you buy property in Bangkok, work with professional realtors who speak your language, the language of numbers. Choose agents who can show you yield data, price trends, and true market performance. Because in today's market, numbers matter more than opinions. If you're ready to explore real opportunities, reach out to professionals who understand both the market and your investment goals. And if you want a personalized yield assessment, you know where to find us, CondoDee.com. At CondoDee, we don't just sell condos, we sell performance, clarity, and confidence.